India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Bang in the middle of the week, once again, an overcast, rainy Wednesday morning here in Mumbai. And we're going to tell you all you need to know as far as markets go. Lots happening. I'm Prashant, with me and my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, I think the biggest headline is SEBI cracking down on, F&O trading and the kind of impact that would have on the market, the kind of impact it would have on retail investors. So we're, of course, going to talk about all of that. But apart from that, so much to track today.
Well, it's 31st of July, so make sure you pay your taxes, as well as it's salary day. It's the final day of the month. We're just having a salary discussion, and it's that bright spot of the month.
Okay, well, it's an optimistic way to begin the day, and let's sort of keep it that way, right? Because if you look at cues from overnight, etc., it's not very bright picture. The market here in India once again faced some selling pressure at high levels, and you could sort of largely blame foreigners because they were sellers once again for the last 2 days in cash markets. They've been selling, and the markets now found it a little difficult to move higher. So 25,000 broadly. Day before yesterday on Monday, of course, we got almost to 25. Yesterday fell within 30 points, and then the market corrected. So that's the psychological level, nothing more. But we are facing some resistance there. Now, levels in just a bit, but global first. Equities overnight are lower. So you got the S&P down 0.5%, the Nasdaq down about 1.25%. You had Microsoft earnings which came through. Now, that's a tech bellwether which reported mixed numbers post-market hours. I mean, the last I checked, the stock was down some 3% in after hours. It's not as if the numbers themselves, if you look at consensus, sort of top line, bottom line, they are bad. It's just that the cloud business, Azure, there is a bit of a slowdown there. And that has been the real big growth driver and signaling impact for the rest of the tech space. So keep an eye out on this one. I mean, I think tech generally in Asia, especially in markets like Taiwan, etc., which are very tech heavy, are also trading a little weakish. This is, of course, a big week for other large cap tech companies in the US. Meta will report, Amazon will report, Apple will report through the course of the week. In a couple of hours from now, and I think in the next 1.5 hours, you'll have the Bank of Japan decision. And there was Nikkei, the newspaper Nikkei, which essentially said that the Bank of Japan is likely to weigh a rate hike at today's policy meeting. So again, something which we've discussed. Remember, the yen is cheap, and the big implication of the yen, the cheap yen, a cheap currency for the rest of the globe, is essentially the carry trade. Borrow in Japan to fund sort of other sort of high-yielding currencies or high-yielding assets elsewhere in the world. But recently and lately, we've seen a big move on the in the other way as far as the yen is concerned. So BOJ becomes important. FOMC later today, and we'll react to it tomorrow morning. Again, nothing is expected from this meeting, but the hope is that the Fed will be clear in its signal for a cut in September because data has been weak. And oil continues to sell off. Another near 1% cut. That makes it about 8% in the last 1 month or so. And now we're under $80, about $79 per barrel. So that's essentially the global sort of cue, which is kind of mixed if you want to take away, if you want to really sort of get the import of the message from the global markets. Now, near-term resistance for the Nifty, I'll start with the upside, is 25, the psychological level. But I think we are headed to 25,337. That's essentially broadly the zone that we've been talking about. Supports come in. You could look at the 40 hourly, but I think we're pretty close to it. The 20-day is, of course, at about 24,500. And I think that is the big one to watch out for. Nifty Bank, actually not just the Nifty Bank, but I think the Nifty as well. It was inside day because the Nifty and the Bank Nifty spent yesterday's session within Monday's range, high to low. Same for Nifty Bank as well, but it held the 40-day exponential moving average here. Monday's high on the upside is important, which needs to be taken out, 52,340, and support for the Nifty Bank comes in at 51,150 and 50,400 and 50,438 levels. These are the two supports on the downside. GIFT Nifty will give you an indication of how the opening is looking like. Flat, absolutely flat, 14, 15 points higher. but there is enough and more in terms of individual stocks, which we will talk about as we go along. Sonia.
Oh, absolutely. And I think all eyes are going to be on the SEBI crackdown on F&O trading. These measures, of course, are positive because these measures are in order to curb speculative trading. But let's see which way it goes. In terms of cues for today, I'm tracking a couple of things. One is the Nifty has been consolidating around the 24,800 mark. So in that sense, we're not getting to the 25,000 level. I guess some amount of patience is required at the moment. Apart from that, domestic institutions are pumping in money thick and fast. So in the last 6 trading sessions, we've seen DIIs buy and trade for 6 days on the trot. And now put together, DIIs have bought 20,000 crores in the month of July so far. I'm watching out for a lot of stocks because post-market hours yesterday, we did get a lot of positive earnings responses as well. Dixon Tech was good. The numbers were above street estimates. In any case, this has been a darling of the market, so expected perhaps to move higher. Torrent Power reported a strong set of numbers, a 23% revenue growth. EBITDA was up almost 60%, so I'm looking at that stock as well. GAIL reported an all-round beat this time. The margins went up 250 basis points on a quarter-on-quarter basis, so that's another stock to look at. Decent earnings from Tata Consumer from the heavyweights, so keep an eye out on that. Lots of auto stocks in focus. Today you have M&M and Maruti that will be reporting their numbers. Tomorrow you have auto sales for the month of July that will be coming through. And finally, we wrap it up on Friday with the Ola IPO that will be opening up. So there's plenty in this space to track. But for now, the GIFT Nifty is suggesting a mildly positive start. And of course, all of these curbs on speculative trading, on F&O trading is something that the street is going to watch very closely.
Well, on the SEBI's consultation paper, I would just say that, I compare it to someone going to the gym and working out hard and ultimately developing a good body. Or someone who's taking some steroids and then developing it. I think SEBI thinks that it's time maybe the person is taking too much of steroids. So ultimately the body is going to be strong. But let's curb it at the right spot. So I think that's my limited point with regard to this consultation paper. But a big day of trade coming up. Though yesterday you'll say, well, we were set for around 25,000 yet again. But we didn't get to that mark. Well, one potential reason could be the Nifty Financial Services Index, where it played out the weekly expiry yesterday. So that's why in the last hour of trade, you did see it come off the top. That could be the reason why, in fact, the Nifty couldn't make it to the 25,000 odd mark. And you saw banks as well as other financial companies that did come off because the Financial Services Index includes some insurance companies as well as some NBFCs. Well, buy on dips is likely to continue on the Nifty itself till the 20 DMA is held out. I'll give you the level in just a bit. While on the Nifty Bank today, you expect some more volatility because it plays out the monthly expiry. So keep an eye out on that one. Second half of trade becomes extremely crucial for this one. The FIs in the F&O market didn't change much. They added some longs. In fact, they covered some shorts as well. So they didn't move the needle very, very much. And as we've been telling you, the FI net long positions holds at around 1.5 lakh contracts. The client net short positions is at around 50,000 contracts. So that's just for hygiene, which is going through those data points because there was no big change in comparison to the previous day. The options data, 24,900 call, 24,900 put, fairly active in yesterday's trade. And you put that premium between them together, it's close to around 200 rupees, which tells you if there's a strategy in place, they're looking to defend this broad level. 200 rupees added to 24,900 and deducted from 24,900, which you get the range then. 24,700 on the downside, the 25,100 odd on the upside. That seems to be the near-term range. This is for the contracts that expire tomorrow. The 20 DMA, that's the line in the sand for the Nifty, so we'll have to keep an eye out on that level as well. The Nifty Bank, yet again, it made a higher low in yesterday's trading session. So earlier it was making, lower lows on a day-to-day. So that's a little bit encouraging. But the levels you're looking at on the Nifty Bank, currently it's between the 20 as well as the 50 DMA. So the 50 DMA becomes very, very crucial on the downside. That's the support level. And you wanted to get closer to around the 20 DMA and take that out. That's at around 52,300 odds. So the Nifty Bank will be the mover today. Those are the crucial levels that you should be looking at. The stock that I'm looking at is Voltas. Yesterday, it went very close to making a fresh all-time high. It almost went there yesterday. So that's the important mark we're looking at. But I think there is a bit of an uptrend that's in the works with regard to Voltas till that 20 DMA is held out. So keep an eye out on that stock. It's been strong in the last few weeks.
Okay, thanks a lot for that. Well, let's kickstart with some opinion coming through on the equities market. We have first up Surendra Goyal of Citi, who says that earnings so far in Q1 are largely in line with estimates, excluding the OMCs, versus the significant beat trends that we saw in the 4 quarters of FY24, with EBITDA to profit after tax growth at 7% year-on-year. He says Nifty EBITDA growth stands at 1% and profit after tax growth stands at 3%. Among sectors, he says industrials have delivered an earnings beat, while energy is among the key misses so far. Surendra says the consensus EPS revision trends so far this earnings season are flat, with modestly higher number of downgrades versus upgrades. He says Citi's June 2025 Nifty target is at 24,400.
Okay, we have, this is the view coming in from Pankaj Chitlangia, First Basis, who says that fortnightly chart of the USD INR indicates a mildly bullish trend, indicating a potential attempt to break the pattern resistance line at 83.9. He says if successful, this could pave the way towards 84.25 level in the coming days, and weekly support is around 83.55, which should cushion any dips. However, he adds, considering the ongoing weakness in the US dollar index, which may persist following the FOMC meeting this week, any upward movement in the currency pair, that is USD INR, is only expected to be very gradual.
And on the bonds, Neeraj Gambhir of Axis Bank says that short-term bond yields eased post-downward revision in short-term borrowings in the budget. Additionally, he says latest draft guidelines on the Basel III framework for liquidity coverage ratio further increase the short-term bond demand. He says the RBI announced that new GSEC issuances in the 14-year and 30-year tenors would not form part of par securities, causing the yield curve to steepen. He expects the 10-year benchmark bond yield to take cues from the FOMC outcome and trade in a range of 6.87 to 6.97% for the coming week.
Well, we've got a lot of stock-specific action to track for you in our special top 10 segment, so let's run you through the list. We'll look at Tata Consumer, GAIL, Indus Towers, Macrotech Developers, Jindal Stainless, Torrent Power and Dixon Technologies. All of them will be reacting to positive news flow, while we have three of them that will be reacting to negative news: Navin Fluorine, RR Kabel, as well as Star Health. So for the time being, we slip into a short break. You come back, we'll continue our focus on markets and the global markets in particular. Chetan Seth, equity strategist at Nomura, will be joining us.
Okay, well, let's get some global perspective in. We have Chetan Seth, equity strategist at Nomura, who's joining in. Chetan, great to have you with us here. Good morning. Thanks for your time. Now, it looks like maybe except the market here in India, sentiment around the world, even in some of the better performing markets, is cracking a little bit, or lately has been a bit fragile. No such problems here in India, Chetan. Your thoughts on sort of the sentiment out there in some of these better performing markets?
Yeah, actually, that's absolutely correct. Actually, if you look at since 10th of July, when we got the US soft CPI, I mean, there's been a bit of a rotation in the markets, and what's happened at least in the global markets front, especially in the US, we've seen tech stocks actually underperforming, some of the small cap stocks actually outperforming, and overall net market is actually down because the weakness in the tech stocks has been a bigger force than the outperformance of the small cap indices in the US. And similar thing we've also noticed in some of the large tech heavy markets in Asia, such as Korea and Taiwan. And as you rightly said, India has been, I would say, what I say is very well behaved that way. So remains to be seen whether some of the domestic flows and foreign flows start getting impacted in the next few days, which leads to some bit of softness in Indian equity markets as well.
Chetan, hi, good morning, and thanks for joining in. So what is the approach now as we head into perhaps a period when most global central banks and our own central bank may begin the rate cutting cycle? How does one approach Indian markets, especially with the markets at record highs?
Yeah, so our multi-month view, at least towards beginning of November, which is when we have the US elections, our view is that, look, maybe you'll see a little bit of more positive momentum, over the course of next few weeks, once some of these big events that we have this week are out of the way. But as we approach US elections, I think volatility will likely pick up because there's huge uncertainty as far as what the US elections will hold out for markets. And I think that may also weigh on India markets. So if you just look at our index target from Nomura's India team for Nifty, it's 24,860, which is precisely where the index is. So which means that from now until end of this year, I mean, returns are likely to be muted, probably flat. But remember, that's a point in time estimate. We could potentially overshoot. But this week is huge. I mean, in the next couple of hours, we'll have the BOJ Normally for Asia, ex-Japan markets, it's not a big event, but there's been a lot of focus on the unwinding of some of these crowded yen shorts, which potentially are also weighing on stocks. So that's huge. Then we have FOMC midnight our time, or like early morning tomorrow Asia, and then we have the all-important non-farm payrolls. So these are the three key events which we need to keep an eye on. And once these events are out, assumingly there's no big surprises here, maybe the market can move back to some of the earlier themes.
Okay, all right. Hi, Chetan. Good morning. So India is at fair levels as per your, as per Nomura. But let's talk about the big events, the central bankers. What are you expecting from the Bank of Japan? There are reports that indicate they'll tinker around with the rates. And also with regard to the Fed, how many rate cuts are you all pricing in from September onwards?
Yeah. So as far as BOJ is concerned, I think it's going to be a very close call. As you may have noticed, overnight there has been some news reports, or you could call it leaks from Japanese media suggesting that the BOJ may actually look at hiking. Now, Nomura economists are not actually expecting a hike, at least in the base case. But there are, we're not ruling out a potential hike today. I mean, the most important question is what happens to the yen. Let's say if the BOJ comes out hawkish relative to expectations, and then there's further appreciation of the yen, i.e., some of the unwinding of crowded shorts. I mean, that may put potentially more downward pressure on stocks. I think so. The yen moves are quite important. As far as FOMC is concerned, our baseline view is it's not going to be a very eventful FOMC, but you always have to keep an eye on what the Fed has to say. Our baseline view is that this year we'll potentially see 2 rate cuts, once in September and the other one in December. If you look at the market odds or the market probability, I think pretty much the market is already pricing in September. I mean, the key question is whether Chair Powell gives us a clear signal on the September rate cut, and our sense is probably will not get clear signals. I think they'll just keep it open and continue to reiterate that, look, we're going to be data dependent and it all depends on forthcoming data. But baseline view for us is September is when we can potentially see a rate cut from the Fed.
Okay, September is when we can potentially see a rate cut from the Fed. I think that seems to be the consensus view right now. Thanks a lot, Chetan. Appreciate your time here on CNBC TV18. Well, let's slip into a quick commercial break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Keep it with CNBC TV18. Welcome back to Bazaar Morning Call. Plenty of stocks to talk about. Our entire team is joining in to give us that list. First up, Tata Consumers came out with their numbers. Mangalam is here to tell us how the numbers looked. Mangalam, good morning.
Good morning. So these numbers were not very different from what the street was anticipating, at least on the top line as well as the EBITDA. So revenue came in at around 4350 crores. The street was working with a number of 4370 crores. The EBITDA as well, 667 crores, a little above street expectations of 655 crores as well. The net profit, that came in at 290 crores versus expectations of 326 crores. Anyway, there was a moderation expected because of higher finance costs and depreciation, and that's exactly what happened. So finance costs came in at around 94 crores, depreciation higher, and that is because, one, they raised some debt to fund the acquisitions of Capital Foods and Organic India, and secondly, because of these assets coming into the balance sheet, the depreciation increased as well. In key geographies, the India beverages business grew 6% with 1% volume growth. Again, street was anticipating that. Foods business grew 14% on an organic basis. The expected range was 13 to 15%, and international business too grew 10% versus expectations of 10 to 11% as well. Strong performance coming in from Sampann and salt business. However, Narishco was a weak point in the numbers with a 7% growth impacted by harsh summer. So that's something that we'll be monitoring. On, Capital Foods and Organic India, the business did close to around 235 crores in the first full quarter versus expectations of around 210, 220 crores as well. So commentary is that everything is online going forward as far as the expansion is concerned. See some green on Tata Consumer today.
Okay, green on Tata Consumer. Thanks for that, Mangalam. Sonal, what about GAIL? Good set of numbers?
Oh yes, it was a strong set, much better than what the street was working with. It's the fourth consecutive quarter of beat that the company has reported. Revenues were up 4% sequentially, EBITDA up 27%. There was a margin expansion to the tune of 240 basis points, leading to a profit uptick of 25%. Across the board, there was good performance, but major outperformance came in from the transmission and the natural gas marketing segment. The EBIT will come up for you on the screen. EBIT for transmission of natural gas came in at 1,500 crore rupees. Petchem, however, disappointed this time, where EBIT was a loss this time of 41 crore rupees versus an expectation of a profit. But overall, it was a good set. Expect green on the stock today.
All right, Sonal, thanks very much for that. Indus Tower is going to be in focus as well. Rima is here to tell us why. The buyback numbers. Rima, take it away.
Well, let's start with the numbers then. There is a beat on the company's margins. Margins have positively surprised because the company has reversed provisions linked to Vodafone Idea, and that reversal boosted their margins by 760 crore rupees. That explains why we've seen the margins jump up to levels of 61.6%. However, if you remove the adjustment because of the provision, then the margins would be on the lower side, and even the tower addition that you typically see on a quarter-on-quarter basis has slowed down compared to the average of the last 4 quarters. But the buyback could support. The board has approved a buyback of 2,640 crore at a price of 465 rupees per share. That's 2.1% of the equity. The release states clearly that the promoter Bharti Airtel is not going to participate in the buyback, which means if it's fully tendered, if the buyback is successful, then Bharti Airtel's stake consolidates above 50%. So that's a positive for Bharti Airtel because they get to consolidate Indus Stars without having to spend any money to acquire that stake. Back to you.
Okay, thanks a lot for that. Well, moving on, macro tech developers and Naveen Fluorine will also be in focus this morning. Sonal is here to tell us why. Sonal, over to you. Well, let me start with Naveen Fluorine. It was expected to be better sequentially, but that hasn't happened. So it was a weak set. On a YOY basis, revenues are up 6.5%, but EBITDA has declined 12%. Margins have come in at 19.2% versus 23%, and profits have declined by 17% as well. It was the specialty chemicals business where we saw a decline this time. So while for HPP, the revenues were up 66%, it did well. Specialty chemicals revenues were down 30%, and CDMO revenues were down 13% as well. So going with red on this one, for Macrotech, we did already know a lot of the operational numbers because of their operational update. If we look at the debt, it has increased on a quarter-on-quarter basis to 4,320 crore rupees. Company says it is because of higher investments that they've been making in growth projects. The price growth has come at 2% sequentially. They've also given their guidance where they expect pre-sales of 17,500 crore rupees, cash flows of 6,500 crore rupees, and new project additions of 21,000 crore rupees in FY25.
Okay, thanks for that, Sonal. Well, Vivek, tell us about Torrent Power.
Well, a good set of numbers by Torrent Power, also aided by the fact that the company ran all of its gas power plants under Section 11. So strong merchant sales was something that the company saw, aided by running plants under Section 11, and also strong power demand actually aided the growth. On a year-on-year basis, the numbers are quite strong. Revenues higher by 23.3%, coming in over the 9,030 crore mark. EBITDA higher by 57%, margins to expanding almost 400 basis points, and profitability higher by 87%. Now, talking about the PLF, thermal PLFs coming in very strong, 60.4 versus 39.6, but you're talking about wind as well as solar PLF, both of them dipped on a year-on-year basis. Segment revenues, generation revenues actually went higher by 65%, and the company said that increased contribution from merchant power sales is something in the gas-based power plants that enabled a strong growth as far as that particular segment was concerned, and also increased contribution from the licensed distributing businesses. Overall, a strong set of numbers aided by running plants under Section 11.
Okay, that's from Torrent Power. A strong set of numbers coming through. Power generation revenues gone up 65%, as Vivek was pointing out. Well, Upasana is with us to talk about Dixon Tech and RR Kabel. Upasana, over to you.
Good morning. Thanks so much for that. First up, let me start with Dixon Technologies. The company reported a strong set of numbers, and the beat was largely driven by company's strong performance in its mobile and EMS segment. Coming to revenues of the company, they stood at 6,580 crores, which was above our poll estimate of 5,325 crores. Company's EBITDA margin stood at 3.8%, which was in line with our poll estimate of 3.9%. Company's PAT stood at 140 crores, which was above our poll estimate of 115 crores. Now, coming to company's key growth driver segment, that is mobile and EMS segment, the revenue saw an uptick of 189% on a YoY basis, and margins also expanded sharply from 2.9% to 3.3% on a YoY basis. Next up is RR Kabel. The company reported a weak set of numbers. The revenue saw an uptick of almost 13% on a YoY basis, while the margins dipped sharply from 7.1% to 5.3%. Now, company's main segment, that is wires and cables, margins dipped by 160 basis points at 7.2%, leading to an overall dip in the margins. Now, margins were under pressure mainly due to volatility in the raw material prices. Coming to company's profit, it stood at 64 crores with a downtick of almost 14% on a YoY basis.
All right. Thanks very much for that. We have the management of Dixon joining us a little later at 9:30. Saurabh Gupta, CFO of the company, will shed light on the numbers and the outlook forward. I mean, of course, their FY25 guidance numbers are very strong, and the Q1 numbers lend support to that overall big view. Well, that's Dixon later. But Star Health also reported numbers, largest standalone private health insurer. Yash is here with details. Yash.
Well, Prashant, I'm going with red for Star Health Insurance because there's a little bit of negative bias when it comes to the numbers for the first quarter. The total net earned premium for the company has grown at 16%, came in at about 3,500 crore rupees. Underwriting profits are down by about 4%. That came in at about 140 crore rupees. And there's not much that has happened on operating profit also, which grew just at about 7%, despite the total income growing as much as 16%. Now, what I'm particularly concerned about here is the combined ratio, which was up 134 basis points, came in at a 97.8% versus 99.14%. And the trend over the last 2-3 years is also concerning. FY23, 95.3, FY24, 96.7, and again now at 99 levels. That's what's concerning, and that's why I'm going with red on Star Health Insurance.
Okay, thanks for that, Yash. Well, I'm focusing on Jindal Stainless. The numbers actually were good, given that pricing is weak. That's why they delivered a degrowth on the top line. But the operating profit came in higher. That's telling you that margins, in fact, did see some bit of expansion. The net profit, though, was lower because finance cost has gone up because they're taking various expansion plans. The positive is the standalone EBITDA per ton in Q4 FY24 got hit because a couple of one-offs with regard to their raw material costs. Now it's bounced back closer to around that 17,400 rupee odd mark. It remains to be seen whether it can get back to around 20,000. So that's a positive, though. And the net debt has moved up, both at JUSL, which is the wholly owned subsidiary, as well as the standalone entity. But as I said, because of the capex they're taking underway, we'll have the management with us exclusively here on CNBC-TV18 at around 10:30 a.m. So you stay tuned to that conversation as well. Well, let's do a quick recap of all the top stocks that we covered. The ones with positive news flow to Tata Consumer, GAIL, Indus Stars, Macrotech Developers, Jindal Stainless, Torrent Power, as well as Dixon Tech. The ones with negative news flow, Navin Fluorine, RR Kabel, and Star Health. Time to take a snappy break. We come back. Devin Choksi is waiting for us on the other side to get some fundamental analysis going. Welcome back. Well, Devin Choksi, Managing Director, DR Choksi, joins us on the show. Hi, Devin. Good morning and good to see you. And as always, Devin, let's get some fundamental analysis going. And I wanted to ask you about Indus Stars. You know, people were debating whether or not Vodafone will survive or not. Probably the better way to play it would be Indus Stars, because that one, in fact, has given a smooth 50% in the similar duration. Now the numbers have come out, and also they are showing some faith by announcing a buyback, which could support the stock. What's your view on the stock at these prices of around 440, 450 levels?
Good morning, Nigel. Well, on one side, I think the fundamental story is intact. On the other side, I think there was a balance sheet issue in form of, I think, the receivables. Now, if this issue is getting addressed, then probably I think the valuation is not expensive at current levels. And that could be, I think, a possibility of investors re-looking at this particular company afresh into the portfolio. As I mentioned, I think from the business perspective, I think the business model, I think, remains intact as far as the company is concerned. Sooner they address this balance sheet issue on the receivable side, I think that would be probably the game changer. as far as I think the new investment opportunity goes in this company. Valuation-wise, very comfortable at this level.
Okay. Well, there are so many stocks that I want to talk to you about, Devin. But, first, a couple of these good set of numbers that came through, right? Whether it was Dixon Tech, whether it was Torrent Power, Gale, Tata Consumer, all reported good set of numbers this time. Which one would be your pick of the pack now in terms of long-term investment?
Thanks, Sonia. Good morning. Well, I think the Tata Consumer remains one of the favorites, I think, as far as the value pick is concerned. However, I think valuation-wise, this stock is fully priced currently, as I see it. Though we continue to hold, that may be a disclaimer too. But the fact remains that I think this company looks relatively more stable from the visibility point of view, as far as I think the business is concerned. Be it a beverage business or be it, I think, the new food packaging business or the food business, which they are basically trying to grow in a systematic manner. I believe that I think this company has a significantly high level of, I think, visibility at this point of time. So maybe I think any price correction, meaningful price correction, if at all, then it would be a good buy opportunity into this company.
Okay, so that is on Tata Consumer. Got it. We also have a lot of auto companies that will be in focus. There's Maruti, M&M numbers today. There's Tata Motors numbers tomorrow. The auto sales as well. What would your pick be from this entire space now, Devin?
So I think continues to remain very positive about the commercial vehicle and the prospects therein. So companies like Tata Motors, Ashok Leyland, they remain relatively more comfortable in our portfolio. All this while I think we have been, extremely convinced about the commercial vehicle story unfolding. And possibly I think that is getting validated now in the marketplace. We believe that I think the story is, having a long way to go, probably another 2-3 years time. And you will see, I think, some of the larger game plans emerging from companies like Tata Motors. So we are comfortable holding on to the company. Of course, I think today the market is probably valuing the company better than what it was yesterday. So from that point of view, I believe that I think one will have to buy when the market gives correction. Otherwise, I think the story is convincing in Tata Motors and likes of Bajaj Auto in two-wheeler space.
Okay, all right. David, the other number that actually stood out was Gale. Sonal was just telling us that those numbers looked quite good. What's your view on the stock?
Nigel, haven't looked into the numbers, I think, in a while for some time now, I think, in this company. So maybe I think we'll study it and then probably make a view on the company.
Devin, shorter conversation today, but appreciate you coming in as always here. Thank you very much for joining us. We'll take a break here. And we focus on the big story, which is, of course, SEBI's proposed curbs on F&O trading action. Rajesh Baheti, Managing Director at Crosseys Capital Services, will discuss this in some detail in just a bit.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, Together, we rise.
पहले अकाउंट खोलो, फिर पीओएस के लिए अप्लाई करो और फिर क्यूआर। पता नहीं कब मिलेगा ये सब।
मुझे तो सब इंस्टेंटली मिल गया।
सीरियसली?
सीरियसली, तू जानता है इसका बैंक कौन है? कौन है? SBI। SBI देता है बिजनेस करंट अकाउंट के साथ पीओएस और क्यूआर कोड। इसे कहते हैं सॉलिड बैंक की सॉलिड बैकिंग।
नाम, इज्जत, पैसा सब कमा लिया। अब बस बेटी की शादी हो जाए, सारी जिम्मेदारियां खत्म। इसलिए मैंने ली है VIPshadi.com की मेंबरशिप। इनके टॉप रेटेड कंसल्टेंट्स ढूंढते हैं सबसे अच्छी प्रोफाइल्स। और हाँ, आपकी प्रोफाइल होगी 100% प्राइवेट। रजिस्टर नाउ।
जो निफ्टी ईवी एंड न्यू एज ऑटोमोटिव ETF में इन्वेस्ट किया है। गवर्नमेंट ने ईवी सेक्टर में लगभग 11,000 करोड़ इन्वेस्ट किया है। बैटरी प्रोडक्शन में 18,000 करोड़। सरकार चाहती है 2030 तक 30% व्हीकल्स इलेक्ट्रिक हो।
आज ही इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।
यूं ही नहीं मैं बन जाता हूँ। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। पर उम्दापन की नई ऊंचाइयों को छूना चाहता हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
PhonePe proudly presents Share.Market. Open a Demat account by 31st July and get zero brokerage till 31st December on F&O and intraday, equity delivery, wealth baskets, and zero account opening fees. Download Share.Market and start investing. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Eat it on time and please ride the bike slowly.
Okay.
And this is for your safety.
Arey, I almost forgot.
LIC.
This is for our safety. दिल की सुनो।
LIC चुनो।
LIC हर पल आपके साथ।
Okay, welcome back. So the SEBI consultation paper is proposing tighter derivative trading rules. And this is, of course, a consultation paper. They've invited comments till the 20th of August, after which, they'll kind of put out the final rules. But let's discuss what is being proposed. A lot of it, of course, we've reported in terms of what could come out, but there are some new things as well. Rajesh Baheti is Managing Director at Trusties Capital Services. Rajesh, great to have you with us here. Thank you for your time. Let's take it one by one, Rajesh. Let's start with the, weekly option contracts. So SEBI is telling exchanges that you can only have one weekly option contract, on one bench, on one index, right? So NSE has 4 weekly option contracts. BSE offers 2. They'll have to sort of choose one, basically. Rajesh, what is the impact of this? Is this the sort of from a broker, etc. perspective is different. I'm talking about from a market volume perspective. Do you think this will have the biggest impact?
Absolutely, Prashant, because till about 6 months to a year ago, BSE didn't have any volumes at all in the F&O segment. And the only reason they came up was A, introduction of weekly expiries, and 2, putting an expiry on a different day in the market. Now, NSE has had the most successful F&O contracts for the last many years, and these are Bank Nifty and Nifty. And asking NSE to choose between the Nifty and the Bank Nifty, obviously, when they use the word benchmark, it's very, very obvious that it has to be the Nifty and not the Bank Nifty. I think would be a big, big blow to the NSE in choosing. Rather than that, I would have probably gone back to the system of each exchange can choose one expiry day per week so that all the contracts expire on that day in the week. Because the SEBI paper, if you see, is clearly saying that people are jumping from one contract to the other on expiry day. So if you were to bunch the expiry days of all the contracts into a single day, people would have to do either or and not jump from one contract to the other on different expiry days with the same capital.
So, wasn't that in terms of stories which were reported earlier? So one expiry per exchange per week. That essentially was what was being reported earlier, right? So this is slightly different?
No. So we were opposing this. I think this is a very retrograde move. Rather than asking exchanges to choose a contract, we could have simply said you can have one expiry day for all your weekly contracts, which means that if I have 100 rupees of capital, I can't go on using it for different contracts on different days. I can't rotate it on expiry days every day of the week. If all expiries, let's say assuming it's on Thursday, then I have to decide between if I want to do the Bank Nifty or the Nifty. And that would have at least allowed these indices to be liquid or reasonably liquid and still exist. You're kind of shutting down 60 or 70% of NSE's business in the expiries because we know, and that has been documented, that the most interest is in the weeklies.
Yeah. On a market-wide basis, IIFL says, the brokerage, and they track sort of stocks in this space, their analyst estimates market volumes could be hit. Overall market volumes could be hit between 30 and 40%. Rajesh, well, that's a large number if that is, of course, it's their estimate, but your sense?
Absolutely. I think, most of the algo trading or the high frequency trading and the weekly expiry trading used to take place. In fact, I don't know the data exactly, but I suspect that the Bank Nifty was the more successful of the two contracts between the Nifty and Bank Nifty. And now you're taking Bank Nifty out of the system altogether. So yes, 40, 50% for sure. But what I see is it might even affect the underlying volume in a big way in the cash segment, which will be a big negative because if you take efficiency of a capital market as one of the criteria to enter a market, then it's likely to take a big hit.
So this is the removal of weekly option contracts, right? And limiting it to one is the big one, to my mind, and
absolutely.
I think you agree with that.
And the biggest, absolutely.
Yeah, the others are, fewer and spaced out strikes in more intervals, right? A higher lot size. I mean, you've said, well, that's the most effective way to do it. Anything else which higher margins on expiry day, and I think that is reasonable on expiry day and the day before, because SEBI's concern is most volumes come on the day of the expiry, on that morning. So it's largely all speculative in nature. So anything stood out for you?
Yeah, so when you talk about margins, I think, margins are something that should be left best to statisticians to work out, and rather than used as an administrative tool. After 20 years in the derivative space, we, in 2019 devised a very scientific Six Sigma based margining system. The problem with this will be if you have the same position, let's say you are carrying a position over from a previous day, and suddenly the same position closer to expiry will require high margin, which means you will be either forced to liquidate that position or bring in more money. To me, that's patently a little unfair because you've not taken additional positions. It's not for the new positions in the market, it's for every position that exists. And all of a sudden, you'll be faced with a margin call. So I think using margin as a tool to control volumes is not the ideal method. We have devised a system which is extremely robust. It has survived COVID. It has survived a lot of other hits like the election result day. And we've had no problems of payments in the market. I think that could have been avoided or should be avoided. I think lot size is one of the things to control. Maybe you could have put a minimum capital adequacy of 5 lakhs that unless you have 5 lakhs with your broker, you cannot even buy an option, which would have stopped this option buying frenzy that the retail has, that, put in 20,000 bucks and buy options worth 20,000 bucks. So I think those would have actually hit the nail on the head as far as retail is concerned, rather than making these blockbuster changes, which might actually damage the market more.
I mean, Rajesh, your view has been that do one thing, wait for the impact, and then see if more is required. But of course, this is not. These are a bunch of changes. But this is still a consultation paper, right? I mean, they're putting this out there, inviting feedback, and then they will decide. And I'm sure that market participants like you and the fraternity will give that feedback. So, out of what has been suggested, what would you tell the regulator?
So, Prashant, my fear is given the kind of publicity this issue has generated. I mean, it almost sounded like this was the biggest economic issue facing the country in the past 1 month, because every day we had headlines. My fear is that now you're kind of committed into doing a lot because of so much publicity. And of course, we're going to give feedback. We're going to try and tweak some of these things. But I don't know if it's almost like a batsman has already stepped out of the crease to hit the shot. So really, it's going to be difficult for us to contain many of these measures, actually.
Okay, all right. Committed to doing a lot. That's, well, a nice way to put it. Rajesh, we'll leave it there for now, but this is an important and live issue, so we'll sort of rely on your expertise in the days to come as well. Thank you for joining us this morning with some of that perspective. So 10 minutes to go for the pre-open session. We'll discuss impact on stocks as well. Brokers, exchanges like the BSE, I think all will be impacted today and over the next couple of days as well. Mitesh and Sudarshan will be with us with some technical trading ideas and trade strategy on the other side.
Welcome back. Well, let's welcome our technical experts onto the show. We have Sudarshan Shukani, who joins us on the show. And with him, we also have Mitesh Thakkar. Good morning, gentlemen. Thanks a lot for joining in. Well, Mitesh, you go first. Yesterday, we were discussing on closing bell as well. 25,000 was almost there. But the Nifty Financial Services Index played out weekly expiry, which pulled us back a little bit. What's your view on the Nifty first up? Mitesh, you're on mute. We would like to hear you.
Apologies for that. Good morning. My idea is that, we have now seen the test of 25,000 on 2-3 occasions and failed to register breakout. So fresh longs should be invited only above 25,000. So wait for the markets to get past, show some strength, or else buy in declines. I think that's the idea to trade in a market which is uptrending, but, slightly facing some supply at a pivot level. So either you buy around 24,700 or you buy on a breakout of 25,000 and then trade the index. Avoid the bank Nifty. As you were rightly highlighting that the financial services index, the entire financial space does seem like slightly shaky. A couple of charts are good, but overall I think the feel of the indices is marginally on the negative side. So I would avoid the banking index and focus on IT stocks or FMCG stocks, etc.
Sudarshan Sukhani is also with us. Sudarshan, hi, good morning. What is your view on the index itself? Because we've seen this market, see higher tops and higher bottoms for a while now. What's the expectation today and what are the individual stocks you're looking at?
Sure, good morning. See, the expectation is that the market is entering into a trading range finally, and that's going to be a wide trading range. So every dip in the market is a buying opportunity, and a rally towards 25,000 would be an exit. So this 100-150 point trade is possible probably on a day or an alternate day basis, depending on where you get the dip. So for today also, if you get an intraday dip, go and buy the Nifty. The Bank Nifty can be left alone, and then look for an exit if you see a decent rally on the upside to around 25,000. That's around 25,000. I also have my 2 bits on that F&O issue that's going on. 25 years ago, when the Badla system was stopped, the BSE said that the whole world is coming to an end. It did not. The markets doubled and then increased 100 times. So this doomsday scenario doesn't impress me. There are good reasons, I'm sure, that SEBI is doing it. I don't think anything will happen.
Okay, all right. Thanks for that, Sudarshan. Let's get to the stocks then. Sudarshan, tell us what are the stocks you'll be tracking?
All right. Bajaj Finserv is a buy with a stop under 1566. Overall Reality is a buy with a stop under 1692. There is a buy list. There is nothing to short. Tata Chemicals is a buy with a stop under 1050, and UPL is a buy with a stop under 530.
All right, Mitesh, what about you? Fill us in with your picks.
I have a mix of buys and sells today. Adani Enterprises, after a long time, comes on the buy side. Stop at 3070, a target of 3250. And good breakout was seen in the charts of GNFC yesterday. So buy here. Keep a stop at 694. Look for targets of 755. Excite looks like to be giving some profits off, and there's some setup when the stock is overbought and now suggesting a pullback. So sell here with a stop at 540 for targets of 510, and Grasim is a sell with a stop at 2830 for targets of 2720.
Okay, let's take a quick commercial break on that note. On the other side of the break, we'll come back with the pre-opening rates. We will also connect with Venkatraman Srinivasan, Chairman of eMudra, to discuss their Q1 earnings. Stay tuned.
Welcome back. This is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're almost getting into market open, so it's a good time to get you some derivative strategies. Rajesh Palvia, Vice President Technical and Derivative Research at Axis Securities, joins us. Hi, Rajesh. Good morning. Good to see you. Run us through your strategy both on the index as well as individual stocks.
Good morning, Nigel. So Nifty is struggling to cross the 25,000 level. We have attempted to almost around those level, but still call writers are there for 25,000 strike at this juncture. So looking at the data setup, 25,000 may act as a immediate supply zone for at least for this weekly expiry. Overall structure is bullish, and we do believe that, yes, sooner or later we are able to take out about 25,000 level also, and possible rally can extend to 25,300 also, as the put base has already shifted up. 24,800 has attracted a major put writing activity at this juncture. So 24,700 to 800 is a important support area for this near-term trend for the market. So we do believe that, if you get any opportunity around 24,800, 24,750 zone is a buying opportunity in the market to hold long position. Keep your stop loss around 24,700 to hold position on the long side. To play this up move, we believe that, one can look to buy 24,800 strike price call option at 146 rupees. And we are projecting target for this call option towards 210 to 215. Your stop loss should be placed at around 105. Bank Nifty is still struggling to cross 52,000 mark, which is very important call concentration area for Bank Nifty. Until the Bank Nifty not crosses those level, we may see some consolidation in range of 51,000 to 52,000 would be the possible range for next couple of trading session. Either side breakout or breakdown will decide the major direction for Bank Nifty from here onwards. But overall structure for Bank Nifty is also on the bullish side. So buy on dips is the strategy. Your stop loss should be placed at around 50,900 to hold long position in the Bank Nifty also. On the stocks front, from chemical basket, Aarti Industry is looking very promising. The way stock managed to give breakout of falling trend line on a daily chart, long built up is there on the derivative data. So we believe that, Aarti Industry can continue furthermore upside. Possible target for the stock we can see towards 770 to 780. Your stop loss should be placed at around 718. The second stock we like from the oil and gas sector, that is BPCL. Stock managed to give breakout of its previous multiple supply zone. The way stock has formed a long built-up setup on the derivative data, we believe that, BPCL may exhibit good amount of rally from here onward. Possible target we can see towards 370 to 375. Your stop loss should be placed at around 338. And the third stock that we like is GMR Airport. Stock again, managed to give breakout almost above 100 rupees on a derivative side. The way stock has shown buying interest in the previous day, we believe that, here we can see a continuation of up move. Possible target for GMR Airport, we can see towards 108 to 110. Your stop loss should be placed at around 96 rupees.
Okay, all right. Rajesh, thank you very much for joining us. Good to get those ideas from you. I just want to quickly take note of the pre-open session and a few stocks, and then we'll go across to our management. The Nifty will come up. I think there was a really wild higher start, which was showing, but that settled down now, rightly so. 15 points down in the Nifty. But let's straight away look at the BSE, Bombay Stock Exchange. The exchange which is perhaps going to be impacted. MCX, I don't think there is any impact at all. But BSE, because of the consultation paper, stock starting about 4% lower. But this is just the first couple of minutes of trade. And then we'll also look at maybe, other Angel, which is a very highly liquid broking name, and maybe Motilal, MK, IFL. There are a bunch of these which are listed out there, but not very. Angel is the only one, and Motilal maybe. Just two which are actively and are liquid as well. Motilal is flattish, slightly higher. Angel is down, and BSE is the other one which is taking a bit of a hit. This is a consultation paper, remember, and feedback till the 20th of August, and final rules only after that. But you heard from Rajesh Baheti earlier on the implications here for the market overall, market volumes overall, if some of this were to go through. But as promised, let's focus on the management. eMudra is with us today.
Yes, eMudra is the company. It is a licensed certifying authority involved in issuing digital signature certificates in India. Their Q1 performance has been quite slow with a decline in revenues and profits while the margins also contracted. To discuss more about the company's performance, we have Venkatraman Srinivasan, the chairman at eMudra, who joins in. Mr. Srinivasan, good morning and thanks a lot for joining in. It's good to speak to you. The start of the year has been very slow if you look at what your past growth rates have been, right? Q1, your revenue growth was at just 16% versus a growth of almost 50% in FY24. So there's a marked slowdown. Can you tell us what was the reason for that? And about the way forward in Q2, Q3, what kind of reasonable growth rates can we expect on the top line?
Yeah, if you see this first quarter, around April middle, the Controller of Certifying Authority came with a guideline that effective from July, no DSE stocks should be sold. So it should be sold directly to the end consumer, and every single DSE they have to pay directly, and then we have to invoice to them. So that was the rule that was passed in April. So with the result, what happened?
All right, Mr. Srinivasan, we'll just fix that audio and we want to hear out what you're saying. For the time being, we just take stock of what's going on with the markets. A mild positive tick is what we're seeing early this morning. A few stocks that are in focus. You have Vedanta, that's a little bit higher because that path towards the demerger is taking shape. So that's one of the stocks that's up close to 100%. Tata Steel comes out with its set of numbers, so that stock as well is holding higher. ITC tomorrow will be coming out with its set of numbers, so that stock is well in focus. And Suzlon, now a 70 rupee stock with massive volumes in pre-open. What a dream run that stock has had as well. So those are the few big movers. For the time being, we're still getting very, very initial rates. Moil is up more than 5%. Last quarter's numbers are good. The problem is this quarter may not be that good because they've taken some price cuts as well. So that's another one we're looking at.
Okay, so in pre-opening, I think there are plenty of stocks which are looking really good, right? I mean, I just wanted to take a look at GAIL. It's the fourth straight quarter of an earnings beat for GAIL. So that one is up almost 3% right now. Torrent Power is the other one. Very good set of numbers, 23% revenue growth. EBITDA is up 56% for Torrent Power. And that one has been a favorite of the market for a while. So Torrent Power, let's just get that up on board. And of course, then you have, okay, look at that, 6% higher on Torrent Power this morning. And then you have Dixon Tech, the mobile and the EMS segment earnings have been very strong. It's been almost a 68, I think 70% growth quarter on quarter that they've seen in this particular segment. And on the flip side, something like a Navin Fluorine saw a big miss this time. There was a big decline in margins and profitability for the company. So that one perhaps could be under a bit of pressure. But we have Mr. Srinivasan, who is the chairman at eMudra, who joins us now. Mr. Srinivasan, apologies, there was some issue with the audio, but just getting back to the business, growth has been very slow as we were just discussing. Going forward, can you expect 20%, 25% growth in Q2 and Q3? Or do you think that it could continue to be in the range that you've seen in the first quarter?
No, the first quarter was mainly affected due to the change in guideline by the Controller of Certifying Authority, where they said the stock should not be sold from effective July only, individually it has to be sold. So with the result, all the partners stopped buying the stock and then they were trying to exhaust their stock. And only for need they bought. So that's why the digital signature itself, that segment itself almost came down by 6 to 7 crore in that quarter. Then the other thing is also because of the elections, some of the government projects and all that, they could not come to any decision and all that. So that's why, especially this first quarter got a little affected. But we continue to feel that whatever guidance we gave earlier of around achieving this 25 to 30% growth with a net profit margin of around 18 to 20%, that will still hold good and we should be able to achieve. Because we have a good order book position and all that. Now that from July 15th, the new guideline has come, the customer has started buying and the prices have also increased. So with all these things, we should be able to do that. So whatever guidance we gave earlier, we should be able to continue to do.
Okay, 25 to 30% growth for the year, right, sir?
Yes, yes.
Okay, and margins will hold steady at around 30%?
What is it?
Margins, the profitability, EBITDA margins?
Yeah, right. 30% and PAT margin around. Because now even in Dubai, which was our key market, the tax hasn't been introduced. So with the result, the net profit could go to 18-19%. But otherwise, EBITDA will be definitely.
Okay, got it. And could you tell us the cash in your books? What is it at? And you've done some inorganic growth as well. So how do you expect that to scale up?
Almost we have some 190 crores of cash is there. So on that, the inorganic growth, what we have to pursue is about 85 crore, which was in the QAP that was budgeted. So even after that, 100 crore cash definitely will be there. And then the collection also, once it improves, so there will be further cash.
All right. Thanks a lot for joining in. Appreciate your time here. Well, let's get back to the markets now. It's 9:10. So Sudarshan Sukhani is back with us. Sudarshan, what's the 9:10 call?
Consider buying Bajaj Finserv with a stop under 1566.
Okay. And Mitesh, what about you?
I'll go with a buy on, a sell on Grasim stop at 28.30 for targets of 27.20.
Okay, let's also talk about some of the big movers in trade. GAIL definitely is one of them. Navin Fluorine, though, is on the downside. Sonal is here to tell us more about both these stocks. Sonal, over to you.
Well, yes, let me start with GAIL. It was a top-down beat, the fourth consecutive quarter of beat that we've seen versus our poll. Margins up 240 basis points on a quarter-on-quarter basis to come in at 13.4%, and this compares with an estimate of 11.1%. The profits also have come in at 2,723 crore rupees versus a poll of 2,334 crore rupees. Beat was led by the natural gas transmission and gas marketing segment this time around. So the transmission natural gas EBIT came in at 1447 crore rupees versus 982 crore rupees, and natural gas marketing segment came in at 2032 crore rupees versus 1389 crore rupees. Citi has a buy call on the same. They have a target price of 250 rupees a share. They say company reported a solid Q1 and it was 33% ahead of estimates. Petchem and LPG were weaker than expectations. For Navin Fluorine, it was a weak set. The revenues were down this time around. Margins were down 410 basis points at 19.2%. Quarter-on-quarter revenues were down 13%, EBITDA was down 9%, and profits were down 27% as well. The specialty chemicals segment, that did not do so well. Their revenues were down 30% on a YOY basis, and company said sales were impacted by inventory rationalization. CDMO saw a revenue decline of 13%, and the company says order visibility here is improving. Morgan Stanley has an underweight with a target price of 2,633. They say it's another subdued quarter, and it implies more recalibration of recovery glide path. Jefferies has downgraded the stock to an underperform. They say the new agrochem plant, which could add 20% to FY25 revenues, has been further delayed, and that could be negative for the stock.
All right. Thanks very much, Sonal, for that. So that's Navin Fluorine for you. But let's go back to the impact on market volumes and consequently exchanges and market intermediaries because of the proposed consultation. The proposals on F&O trading. Vamakshi is here with details. Vamakshi.
Well, absolutely. Jefferies believes that SEBI's new rule directly impacts nearly 35% of F&O premiums. And in fact, they believe that spillover of trading activity from these contracts into some of the remaining products could, however, limit the impact to 20 to 25%. Phased hikes in lot sizes by almost 3 to 4 times and margin hike near expiry could impact retail tailors. They believe that the impact on players could be divergent. Exchanges and retail-focused brokers will be most impacted from the proposed changes. This includes the likes of Angel One, BSE, MCX, MOFSL, IIFL Securities as well as ICICI Securities. For BSE especially, they believe that the removal of the BankX weekly contract can impact EPS by almost 7 to 9% from FY25 to 27. The impact is expected to be low for depositories like CDSL as well as NSDL. Clearing members like Novama, which cater to institutional players, which are less impacted but could see some second order impact as well. No impact is expected for wealth managers, EMCs as well as RTS. So keep an eye out on all of these counters.
All right. Vamakshi, thank you very much for that. Market opening coming up in a couple of seconds from now. We'll take stock of what the indices are looking like. And of course, we'll drill down to individual names as well. So, a flattish start is what is I think expected. A 30-point higher start is the gift on the pre-open session is where we've left off at. Some of the big names, of course, will be on the market intermediary side. Navin Fluorine perhaps is a big one that Sonal just outlined earlier for us. And of course, there is a fair bit of spillover, right? Because, I mean, we've had strong runs in many pockets and there could be continuation as well. We'll pick those out right at the word go. as we get the first rates up. So we are at 24,886, first 6 coming through on the Nifty, which is about 30-40 points higher. You've got the sensex, which is starting at about 81,566. That is in the green as well. The bank Nifty is absolutely flat. So 51,536 on the Nifty bank, almost unchanged. Market breadth is solid, 3:1 in favor of advances, as it has been for the last 3 days now. So no problems there. And sectorally, we'll pick out some names. IT is there. I mean, the Nifty IT index is starting about 0.25% in the green. But these are indices, but let's get to stocks. Sonia.
Okay, so let's get straight to individual stocks. First, the ones that are in the news, right? Tata Consumer, good set of earnings coming through. Revenue growth of 16%. Margins have improved. The stock, though, is coming in for a little bit of profit taking right now. GAIL is the one that I'm looking at this morning. It was up 3% in pre-opening. Right now, GAIL is up 4.5%, post a good set of numbers. UBS has a buy with a target price of 250 on GAIL. So keep an eye out on that. Torrent Power is the other one. Good set of numbers. 8% higher on Torrent Power this morning. So clearly kicking it out of the park, this one. Torrent Power, you know, its power generation revenues went up 65%. So its core business is doing very well. And that's what the street has liked. Dixon Tech also, I mean, that's been a favorite of the market lately. Good up move in the mobile and the EMS segment. On the downside, you have Navin Fluorine that is not looking that good. Big decline in margins and profitability for Navin Fluorine. So that stock is down almost about 2%. Otherwise, for the market, a lot of other stocks in the broader markets that are doing well. The mid-cap index itself is up about 200 odd points. MOIL is up about 5%. You have a couple of other names. Zaggle Prepaid is up in the green. Yes Bank is trending higher as well. ICICI Bank is up 1%. So looking pretty good.
Well, that's right, Sonia. Even Granules India, you know, that stock ended higher in yesterday's trading session. Today, it's building onto those gains. So good move out there. Talking about exchanges, MCX actually is higher with a gain of closer to around 2%. More commodity focus. So that one, in fact, is doing pretty well in this morning's trading session. India Mart, Rima at Wanda said yesterday, yes, the margin picture looked quite good. And that's why the stock ended at the high point of the day. But the details that followed post that weren't very impressive in terms of subscribers as well as guidance going ahead. That's why the entire 5% that India Mart put on in the final hour of trade yesterday, it's given all of that back. That stock, in fact, is down 5.5%. Indus Stars, the stock has seen a big run. It made a low of around 430 rupees. It's bounced back actually off the low point of the day. So good move on that one as well. A few more notable movers. RR Cabel, well, that stock has come for a bit of a knock, down 3% as we speak. So that stock is a little bit lower. Titagarh Rail Systems as well is taking a bit of a knock in today's trading session. So a lot of action we can see from the broader markets. The breadth of the market is very, very good. 4 stocks advancing for 1 stock that's declining. The bulls will take that data point.
Absolutely. And, you know, so it's at least on the indices, it's a bit of a quieter start. But, I mean, it's not a bad start by any yardstick. So we'll have more stocks, more individual names, etc., which are moving, coming up in just a bit from now. So let's look at a few other names where there is activity and action. So Torrent Power, GAIL, Dixon, of course, are the 3 biggest volume-led gainers as well. We mentioned the price change, but these have got the largest volumes. There is Granules as well, which has got very large volumes. I just want to look at what 361 is doing. 361 reported numbers. Remember, Nuvama reported a stellar Q1. Wealth management. 361 has also reported a stellar number. Stock's done very well. So that one is up about 1.5%. Jamna Auto is up 4%. Stocks at about 145. HCC is a big performer this year, but another 3% this morning. 56 plus on HCC. Skipper was up 10% yesterday. Skipper is up about 4.5 right now. Balchand Nagar, defense name, 5% higher, 418 on Balchand Nagar Industries. Volumes right out of the gates, I mean, yeah, things are picking and things will pick up, I'm assuming. But for now, it's a little quiet. Away from the names that I mentioned, not very much going on down the list here. Jyoti Structures and Suvain Pharma. These are all, 4-5% kind of movers. Himmasinka Seed is up about 3%. But beyond that, not very much by way of volumes. On the downside, India Mart, I think we did mention it. India Mart numbers came during the last hour of trade yesterday, and numbers looked good. Stocks down 5 though this morning. And look at volumes. This is the top traded loser across the board. Titagarh is the second largest loser on the NSE, volume-led loser. It's down 5%, and you'll hear from the Titagarh management in a bit from now. Power Grid is down about 1.75%. Sonal mentioned Navin Fluorine, which is down 2%. There is Cochin Shipyard. Angel One is down about 2.5%, nothing large. Castrol is another company you'll hear from a little later on the program. Stocks down about 1.82%, 2% actually. And Idea Forge sold off dramatically yesterday. And Idea Forge is down another 2% this morning. Of course, continued reaction to numbers. Star Health is another sort of earnings set, which we highlighted with Yash earlier. Star Health is starting down 1.6%. So actually, there is more volume on the downside, even though in terms of just numerically, there are two stocks gaining for every one which is actually going down at this point in time. Let's assess price action and momentum and underlying strength in the markets with Gautam Shah. He's a market master of the day, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time. We had a global sort of guest with us in the morning, looks at Asia Pac, and I was made a comment, and he agreed that if you look at markets around the globe, right, some of the better performing markets, there are signs that momentum is flagging a little bit. Here in India, no real such sort of sense still. We are in a very strong up move, on the market, broader markets and on the Nifty as well. What is your sense, Gautam, and the phase that we are in, and what should we expect in the near to medium term?
Well, good morning, Prashant. I think as we always discuss, domestic liquidity is a revolution. And I think that's decoupled our markets to a lot of things around the world. It started off with decoupling with the Asian markets like China and Hong Kong, which we used to closely track, I think a decade and a half back. Then it got us decoupled with the Indian rupee, and then pretty much with oil as well, with what has happened in the last 6 to 8 months. And now you had this weakness in the US markets, and despite that, our markets were stubbornly resilient. So I think we are in a good space. I think we remain absolutely solid on the charts. And I do believe how markets handled difficult situations and difficult events is an indication of internal strength. And I think the two major local events that we witnessed, the elections and the budget, and the global events in the form of the two geopolitical events that we saw, and the fact that the Fed delayed its rate cuts, I think all of these factors and how Indian markets handled it was a clear indication that we are still very, very strong on the charts. Had it been a decade back on the budget day, we would have lost about 10%. And I think that's what the domestic liquidity has really done, because it's really become a way of life for a lot of market participants. So a small change in tax, I don't think will have a very great impact on what markets participants do from a longer term perspective. So having said all of that, I think the trajectory is still up. We still see amazing rotation at the marketplace in terms of sectors and in terms of segments. And I do see further upside taking the market towards 25,500. I'm not so keen on where the markets head higher. I think support levels are very important. Until we are safe above support levels, which is the view, I think there is more to go. So pretty much the way the charts are right now, the best is yet to come, and we don't see any major signs of topping out.
Okay, no major signs of topping out. Bullish as always. It's good to see you that way, Gautam. And of course, this has been a market, right? I mean, the kitchen sink has been thrown in the market and it's still sort of emerged on top. But tell me, from here on, if you had to decide on sectors or stocks, right, where do you see any kind of value? I'm asking because it's very hard to find companies with sort of where there's any kind of valuation headroom. What are you looking at on the charts?
Yeah, I think value is a tough word to find in today's market. I think value has moved higher a few notches pretty much with what has happened in the last 6 to 8 months. But so be it. I think what you've seen in the last 2 months is the phenomenal comeback of FMCG and pharma and IT. I think these three sectors are considered defensives, and they have pretty much been the poster boys, of the recent past, and they continue to look rock solid on the charts. So we are actually banking on these three sectors, and I feel that these three sectors should continue to run up significantly, along with metals and chemicals, which I think are at the verge of the next phase of the bull rally. I would also want to add financial services as a basket. I know we keep looking at the bank Nifty, but if you look at the financial services index, which has banks, NBFCs, and insurance companies, I think that's one sector that can do significantly well over the next 1 year. So, these 5, 6, 7 sectors which I just highlighted are not the poster boys names. It's not the typical railway, defense, real estate, capital goods, where I think we have been recommending profit booking and switching to some of these sectors which are more defensive in nature.
Okay, all right. Hi, Gautam. Good morning. Good to see you in. Just give us the, the level on the Nifty then. You've given us spoken a lot about sectors. By the end of this year, what are the charts indicating? Where are we headed?
See, I think the last bull market has taught me that you don't discuss too much about the magnitude, because this market can just continue to move higher, or rather grind higher, and I still don't think we have seen a blowout in some sense. But in terms of a short-term number, I think 25,500 is a number that we have been working with, and I think we will get there gradually. In terms of a more longer-term number, I think 28,400 on the Nifty is possible. It's not going to happen in a straight line, but gradually we will get there with some corrections along the way. But in terms of support levels, which I think are more important, 24,600 and 24,100 are extremely important. Until the Nifty is above these numbers, I think the market is okay. And I do believe that the Bank Nifty from here will play a very key role. And if the Bank Nifty manages to sustain above levels of 50,000, there is still a very high probability of that index moving about 12 to 15% from here.
In terms of global markets, what are you noticing on the charts? I'm asking because, this has been such an uninterrupted bull market. Ever since COVID played out, we haven't seen any major sell-off, even across the globe, not even a 10% correction. Is that looming around somewhere?
Well, that's the beauty of it. I see a lot of people talking about references of history and references of the past. I don't think you can use anything in history in the last 30 years to say or discuss or to forecast what's happening right now. Having said that, 2003, 2007 bull market saw multiple 10, 12, 15% corrections. But the fact of the matter is, 3-4% is the new 10%. And that's probably the reason in the last 1.5 years, you've had these 3-4-5% sweet corrections. They come, they scare you, they make the market healthy, and the markets are back on track. So I think this will continue. India continues to be the poster boy in the global basket. If you look at the top 40, 50 markets in the world, we are still one of the best performing markets. And that's probably the reason FIs cannot ignore India anymore. And that's why the large caps have made a comeback post the election results. And I think that's going to continue. So definitely there are risks in the mid caps and small caps. So you can't go out there and buy anything and everything in mid caps. But I think the top 100 is still looking quite lucrative on the charts.
Okay, all right. Let's talk about a couple of heavier names then. Reliance Industries as well as HDFC Bank. One has been a big outperformer. The other one has been lagging. Well, what are the charts indicating on both these two? Because you put it together, well, it's more than 20% of the index.
Yeah, I think a couple of months back at lower levels, we put out a very bold call on SDFC Bank. And we said that, it was available near the COVID highs. So it was a very clear buy when we looked at the ratio charts. And I do believe that SDFC Bank can do something special over the next 6 to 12 months. In fact, our working target is as high as 2,000. And if that were to happen, the Nifty and Bank Nifty will be up. In fact, if you look at the contribution of ITC or Dr. Reddy's or Bharti, I think many of these index heavyweights have shaped up really well. And I do see a big opportunity in SDFC Bank, even from these levels. On the other hand, in some sense, Reliance has been an underperformer. It's not a favored stock. It's not a path that I'm going. It might do well, but I don't think it's going to create serious alpha. I would still bet on an ITC, which we discussed in our last interaction. And I think there is more juice left there. But within the banks, I think SBI, ICICI, and HDFC, I think these three big banks could potentially lead the market higher from these levels.
Okay, one final question then on the auto stocks. Any thoughts there? Because, they're in the news right now. We have a big IPO coming up on Friday as well, the Ola IPO. Then the two-wheeler companies will once again be in focus. Anything on the charts there?
Not really, Sonia. I think the auto index is looking quite toppish at this point of time. It's just that the market momentum is so strong and therefore they are up. However, I would look at the auto ancillary companies. I think that's a space which I'm betting on for the next 3 years. And I think that's a big opportunity. But talking about opportunity, I think chemicals is one space which we are very seriously looking for the last 1 month. And I think a lot of these top quality chemical stocks could be the serious winners over the next 6 to 12 months. And we've actually recommended some at Goldilocks recently.
Gautam, the Bank of Japan decision is out. There is a finally, they've raised policy rate to 0.25%. I don't know after, I think how many years, but they've finally effected a hike. I mean, it's Japan going one way, the world going the other, right? I mean, you've got the rest of the world waiting for rate cuts to start. I mean, the US and Europe, here in India, other emerging markets, but in Japan, I mean, there has been this wait that they will actually start to increase interest rates because inflation after 25, 30 years is finally, it did finally cross that 2-3% kind of levels. Any thoughts at all, Gautam, if you track this stuff or you've been watching the USD JPY big moves lately?
Well, not closely enough, but I do believe that every country has its own dynamics, and I don't think it impacts Indian markets so much. And I think the Japanese market also went to lifetime highs after almost 25 years of staying in a grind. So in that sense, I think it's great for that country. But I think Indian markets will be looking at what the Fed does. And I think in the September-October meeting, pretty much the consensus is that the rate cuts are coming. And I think on account of that, you could have financial services trying to discount that. So that's probably the reason I keep saying that financial services could be a theme to watch for the next 3 to 6 months.
Okay.
And we don't have sort of exact figures, and it'll be interesting to get that. One of the ways why Japan is important is because so much of Japanese pension money, local money, retail money, has essentially gone out of Japan in other markets around the world looking for yield. And that is essentially what is sort of known as, one sort of representation of the carry trade. It typically is referred to foreigners buying in Japan and buying assets around higher yielding assets around the world. But it's also true that Japanese sort of money, local retail money in Japan is flooded across the world. And in India as well, I remember a global city report saying that Japanese money is a big part of the foreign inflow which has been coming to India through various structures, etc. But that has been happening over a period of time. And I think the return differentials are still very, very high compared to, especially now with the sharp outperformance that India, etc., has seen. But we'll track this one, get you some reactions over the next couple of hours. I think first rate hike after some time, policy rate increase at 0.25%. The newspaper Nikkei had reported that a hike is coming, and it has really indeed come through. Sonia.
Let's do one thing. Let's talk about Dixon Technologies, because that really is the stock of the moment right now. I mean, the company has reported a very strong performance yet again in Q1 with the earnings coming above street estimates. It's their mobile and EMS division revenue contribution which has seen a very big surge, but their consumer electronics and appliances revenue contribution has decreased. To discuss more on this, we have Saurabh Gupta, the CFO of Dixon Technologies, who joins us now. Saurabh, thanks a lot for joining in. It was a very strong performance in the mobile segment, and because of which your numbers are well above the street estimates. I just wanted to understand, in the mobile and EMS division, your revenue contribution is now 79%. Do you hope to take it up further, and what kind of sustainable growth rate do you see in this business on the top line?
Yeah, thank you, Sonia. Thank you for having me. So as mentioned multiple times, Sonia, I think mobile is the largest trigger for our growth because that is the largest opportunity pool as compared to all the other verticals that we have. I think so in the next couple of years, I think so IT will start playing a bigger role. They will be, of course, they will be the next growth engine for us after mobiles, but it will take us another 12 to 15 months for that. But clearly, I see mobile contributing a larger portion. But even the other verticals like telecom, IT hardware going forward will start contributing a meaningful number.
Okay. So in terms of a growth rate, for the mobile business, I just want to understand in FY25 and FY26, what kind of, do you have any kind of targets, particularly for this segment?
So last year we did almost 6.7 million smartphones. This year, we are targeting almost 28 to 30 million smartphones. Our acquisition of iSmartU is also in the final stages of getting completed. We got the CCI approval, and in the next 1 week or so, we will complete all other formalities and start consolidating those financials. So 25 million is what we expect outside of iSmartU, which is for brands like ITEL, Techno, and Infinix, and 5 million we expect through ITEL brands. So clearly, we will have the largest capacity in India of almost 45 million smartphones. and then 10 million gets added through iSmartU. So we'll have one of the largest capacity, and almost we have 55 to 60% of the opportunity pool which is available in India. So clearly we have created a large capacity. Now the idea is to go deep into more manufacturing, deepen the level of manufacturing, get into components, precision components, mechanicals. Also, we have already finalized a technology part on the display. So the idea is to create more technical skill set around that, create more competitive moat, and acquire that competitive strength by getting deep into components.
Okay. Hi, Saurav. Good morning. Good to see you, Vin. So 28 to 30 million for this year. And I think next year you're talking about 40 million in the mobiles business, right?
Yeah, broadly it should be somewhere around 40 odd million, yeah.
Okay, so mobile's the one that's going to be driving. But as you mentioned briefly, that the IT components or products, that's going to be the next driver of growth. But I think majority of it will come in FY26. In the past, you've hinted that the TAM, the target market, could be approximately 50,000 crores as well. How do you see revenue shape up, say in FY26? What kind of a revenue number can IT products report for you?
Yeah, so Nigel, clearly IT hardware is a 10 billion opportunity in India. And of course, the production value should be somewhere around 50 to 55,000 odd crores. And clearly, like the way we have always captured a large market share in other categories, our aim is always to take a 20-25% market share over a period of time. So what we have committed to the government is revenues of almost 48,000 crores over a period of 6 years. Now, if you look at, we have already closed contracts with Lenovo and Acer. Acer, we are already manufacturing. And Lenovo, we start manufacturing by Q3. Also, we are also in the final stages of closing with 2 large brands. In fact, those brands are already on board. We are just concluding the final agreements with them. And those brands we start manufacturing by next financial year in our campus in Chennai. So practically, we have now all the 4 large global brands out of the 5 global brands. So it will be a large revenue driver for us going forward. And clearly, next year, we can hope to do revenues of anywhere between 2.5 to 4,000 odd crores, depending on what time we are able to start in our Chennai campus.
I think the street is working with a number closer to around 4,000 crores. You think that's gettable for FY26?
Yeah, broadly it should be in the range of, I think, so 3,500. That we're slightly more confident on that. But yeah, if we stretch ourselves and if we are able to roll out our campus slightly early, we can stretch it to 4,000. Yeah.
Got it. Saurabh, so 2 more brands you've almost have got signed up, right? Something you hinted earlier as well. So we should have an announcement soon, this quarter?
Yeah, you should have an announcement soon on that, yeah.
Okay, I got it. What about, something we've sort of discussed earlier, industrial sort of EMS segment on the automotive side, etc. Where are plans there, and by when can we see things being fructified?
Yeah, so if you look at our strategy of setting up campus in Chennai, it's mainly aligned towards getting into PCBAs for industrial and automotives, because that's where the large hub for electronics is, hub for automotive sector is. So we are in discussion with a large brand, and also we are in some kind of discussions on the automotive side. So my sense, by next financial year, we should have some numbers coming in from this segment as well. So we have already, as I mentioned, we have created infrastructure. We are building on a team for that. And we think it's a core for us, and we'll definitely have a big crack on it.
When do you start? When do you start production, Saurabh?
Hopefully in the next 12 months, and anywhere with 9 to 12 months, hopefully.
And that tie-up with a major brand, that should happen this quarter?
It will take some time, but the discussions are going on very well, yeah.
Okay, I got it. So just talk to us a little bit about overall margins as well. How's the environment on the sort of cost side, pricing, etc. looking? And what should we expect for FY25 overall?
Yes, broadly, I think so. Our numbers will only get better from here on account of that acquisition, which will now start getting consolidated. And also, if you look at Q2 is always seasonally a better quarter as compared to Q1. And a lot of our customers in mobiles have now ramped up, and the numbers will only increase from here ahead of the festive season. So we expect better margins in Q2. Overall, I think so we should be somewhere around 4% kind of levels. And then the strategy to get into more backward integration will only help us improve our margins year on year, because all this component play is very highly accretive on margins, even though they may have a lower asset turns, but yeah, they're very positive. They'll have positively have an impact on the margins here.
Okay, so sort of just one question before we let you go. Any plans to exit the lighting segment, or do you believe that will grow? Because currently it's quite small.
No, Nigel, I think so the worst is behind us. We had a tough time, tough last 12, 15 months. There was a lot of pricing erosion which has happened in this industry. But now I think so we are getting our whole thing back on this. So we are expanding into new product categories of floodlights, street lights, professional lighting. We're getting into some premium product categories. We're getting into backward integration. And if you look at the revenues for Q1, it has actually grown by 15% as against Q4. And we are also working on some export orders. So clearly, my sense is the worst is behind us. The pricing has kind of stabilized now. And it's an important play for us. It's an ODM business for us with 7 to 7.5% kind of margin. And so we'll continue to, there's no plan to exit out of that business here.
Thanks for clarifying that, and wish you well for the remainder of this quarter. Congratulations on a rather good showing. The stock has seen a big run, but it continues to move up because of the positive commentary that you'll have given on the con call as well as on this interview. Well, let's focus on the next company, Titagarh Rail Systems. The stock is a little bit under pressure. First quarter was a little bit weakish. Lower execution of passenger wagons impacted the overall numbers. Mr. Umesh Chaudhary, the Vice Chairman as well as the MD of the company, joins us on the show. Hi, Mr. Chaudhary. Good having you on the show. Thanks a lot for joining in. Well, what went on in the first quarter? What was the execution run rate? I recall you were talking about around 1,000 wagons per month. What was it in the first quarter, and how do you see it shaping up?
You see, as far as the first quarter is concerned, we did about a lesser number of wagons. We did close to 2,100 wagons. That's an average of 700 wagons. If you compare it to the year-on-year quarter, we were better than that, about 10%, 12% more than that. But the first quarter was adversely impacted because of the severe heat wave, the elections, and there was huge absenteeism. And normally the first quarter is traditionally in our industry, you can see in years, is a slower quarter compared to the pickup that happens in the further quarters. So we are very confident that we'll be able to make up this in the coming 3 quarters and reach our target. We've always projected that we'll do about 10 to 11,000 wagons this year, and we should be in target to do that.
Okay, 10 to 11,000 wagons this year. That's in FY25?
Yeah.
Okay, and in terms of those are the passenger deliveries that you're talking about?
No, these are the freight wagons. As far as the passenger, the passenger trains are concerned, which is the PRS segment, we had told in March also. If you see really that the revenue that we had on a year-on-year comparison is about 100 crore less in passenger, that is primarily because the Pune metro contract was completed, the execution was completed, and the Bangalore and the Surat, Ahmedabad and the Vande Bharat actually is. So Bangalore, for example, the production started last month, and we'll start the first train of the Bangalore metro will be delivered in Q2. So, this is going to ramp up really from Q2 onwards. I would say more than Q2, Q3 onwards. And, we are going to get to capacity as far as the passenger rail segment in FY26 when Vande Bharat also starts. So this is a business which is new, which is picking up. And I think we are very well on track to pick up this business.
So, in the passenger business, your margins currently are at around 6.1% to be precise. But earlier you had targeted for an exit margin of 10% in FY25. Are you on track to doing that, and will that be largely from the passenger segment?
Absolutely. So, it's all a question of operating leverage. So the fixed cost in a passenger business is quite substantial. We have design centers and we have like a very, very large scale infrastructure. So obviously with a 60 crore revenue, the margins come under pressure. But going forward, even for the year, we would be, for the PRS alone, the targeted margin should not be a challenge for us to achieve.
Okay, the start of the year has been a little bit soft, as you said, because of severe heat wave, elections and the likes. But for the year, what kind of a revenue number are you looking at? And the consolidated margins as well will be at around 10%, right, for the year? That's FY25. In FY26, I think you have hinted it goes to 12-13%.
So as far as the passenger segment is concerned, you're right. As far as the freight segment is concerned, what we had always said is that the margins are likely to be around 12%. That is what we have always guided. As far as the revenue is concerned, I just mentioned we have a strong order book. We have an order book of 20,000 crores, 20,000 wagons in the freight. We have very strong order books in the passenger. So we'll be able to ramp up the freight in these next 3 quarters. And the passenger is a much more, I would say, gradual ramp up. It will continue from Q2 onwards. But we'll really see the big impact of the passenger in FY26.
Okay, all right. There's a 55,000 crores worth of ordering pipeline. I think we've discussed this in the past. How much can you garner, sir?
So these are tender-oriented business. For me to give a number to that is going to be very
okay. What's your normal hit rate?
Yeah, so that's what I was saying. We normally in the freight side, we've always had about a 25% market share. So we will continue to keep our market share on the freight side. As far as the passenger is concerned, so if you really look at FY24, we did an average of maybe 3 cars per month. We will reach close to 15 cars per month by end of FY25. And the capacity that we are building that FY26, FY27, 28, the ultimate target is to reach 72 cars per month. So that is the kind of delta that we are talking about, from 3 cars per month on an average to 70 cars per month in maybe 3-4 years.
Okay, all right, Mr. Chaudhary, appreciate you joining in and giving us a fair sense of why the past quarter was weak and why you're optimistic about the future from here on as well. Wish you well for the second quarter and for the remainder of this year as well. For the time being, though, we'll slip into a short break. You come back, we'll get a chat going with Castrol. A lot of focus on that particular company. We'll try to get in more out of the management. Stay with us.
Welcome back. You've got the market, which is up 30 points, and 24,890 is where we're at right now. Market breadth, overall market breadth is positive. 1,400 stocks are up, 900 stocks are lower. That's, the overall picture out there. And there is a lot happening as far as the broader market goes. I mean, the big gainers are, volume-led gainers are GAIL, there is Torrent Power, Suvain Pharma, Skipper, there is Stanley, which is the furniture maker, with recent listing, 6% higher. Thyrocare is up 6%. Honasa is up 5%. So things have really picked up with lots of new names in the mix as compared to when we started early on. I just want to highlight what's happening on the Bombay Stock Exchange, BSE, the stock. It's up 6% right now. Rajesh Baheti alluded to this, not directly with regards to what stocks may do, but the fact is that, essentially, SEBI is telling exchanges that you have to choose one weekly option contract on one index. NSE has got 4. BSE has got 2. BSE has got the BankX and the sensex. The NSE has got the Nifty, Nifty Bank, Midcap, Fin Nifty. And they got to choose one, let go of the other 3. BSE has got to keep 1. The point is, volumes, without going into the exact numbers, NSE, in terms of weekly options, will have the overwhelming majority of the volume share. And, you're essentially now telling NSE that you can only have 1. So naturally, the leader's got more to lose. And because both will only have 1 weekly option contract, some of this volume, which was happening on the NSE and some of the other weekly option contracts as well, should move on to the BSE as well. That is essentially the bet that markets are making. What remains to be seen, what we don't know yet, is that will there be a big impact on overall market volumes? Because if that is the case, some of the benefit, BSE-specific benefit, may be muted. But this is, of course, all in the realm of thinking and expectation, because we don't even have the final rules right now. This is based off the consultation paper which SEBI put out yesterday. More on this story with the exchange themselves, hopefully, through the course of the day. Castrol India is the next company that we are speaking with. Stock's done phenomenally well this year. But the performance in the second quarter was a bit muted. Low single-digit growth in revenue and profit margins were also kind of flattish. We have Mr. Sandeep Sangwan, Managing Director at Castrol India, to talk more about this. Mr. Sangwan, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So Q1 has been, this quarter has been muted. Even H1 overall has not been all that great. Could you give us an indication of what we should expect for the full year in terms of volume and value growth, sir, FY25?
Yeah, first of all, I think thanks for having me on your channel, Prashant. And let me give you a perspective. I think we've delivered a 5% growth in revenue in the second quarter and a 3% rise in PBT on the back of continued investments in our brands. We launched the Shah Rukh Khan campaign on Castrol Edge. And if I also compare it to what we've done historically is our top line growth used to be in the region of 2-3%. And I think what we're trying to do is balance out top line growth and bottom line growth. And we're very happy with the top line growth, volume and revenue profile that we're building now. Okay. And our volumes have been pretty much in the same level as revenue growth. And the other thing is we continue to invest behind our brands, launch new products. For example, in second quarter, we launched Castrol Edge portfolio for SUVs, for hybrids and European cars. And this is the top performance product in our cars portfolio globally. So muted depends on which perspective you see it from. I think what we are focused on is now driving top line growth balanced with maintaining our margins. That's where we are.
So can you give us the exact number, Sandeep? What was the volume growth that you did in Q1? And for the rest of the fiscal, what is the kind of average volume growth that you are expecting?
So I think our volume has grown in the level of 5-6%. Okay, that's the core business, lubricants. And I think as far as the full year is concerned, we want to grow a couple of points ahead of the market. Okay, and this market grows at about 4-5%. And I don't know where the volume will end at the year end, but our intent is to drive top line growth through volume growth.
So you're saying that there is no scope of double-digit growth in the lubricants industry, not just for your own company, but even for the industry overall this year?
I think depends on where we play and where our competitors or other colleagues in the industry play. And I think we can get to double-digit growth levels, but a lot will depend on diversification also. But the core lubricants business will continue growing at about 5-6%. That's our outlook. And if we can beat that category growth and then add on some revenues on top from playing in adjacencies, I think that can get us to a much higher volume growth profile. Just to share an example, we've launched auto care range of products last year, which are now available in 45,000 outlets. We're trying to scale that business. We've got good response. We have a portfolio of 5-6 products in that auto care range now, which will continue building. So there are additional levers of growth which will come in as we look at the future.
Okay, all right. Hi, Sandeep. You briefly mentioned that Shah Rukh Khan's on board as well. That would mean higher advertising spends. So as a percentage of sales, what was it? And where does it settle at for the coming year? And putting that into context, what does it do to margins? 22 to 25% is what you've been talking about. Will you be closer to the lower or the higher end of it?
So let me start with margins first. We've maintained our margins at about 23% in the second quarter also. And what we said is in some quarters it's been 22 in 23, but we are able to maintain those margins at 23-24% levels. Okay, that's one thing. Yes, advertisement expenses will be higher, and they've been higher by about 16% in the first half of this year. But that's a part of the strategy. It's not something that we want to give up. Typically, we invest about 4 to 5% of our revenue in our brand investments, and that will continue going forward. If anything, we may continue investing more. But Castrol has been built. It's a brand which is loved by Indian consumers and customers for more than 115 years in the country. And we have all the intent to continue building that brand, supported with innovation. by bringing new products for our customers and consumers.
Okay, all right. Sandeep, the street got very, very excited about the data center opportunity. We had the management of Gulf Oil who said, given the entire matrix and the entire pie, it's not such a big opportunity. Though the stock market is quite bullish that Castrol has a big opportunity out there. Could you give us your reading of this? How big is the data center opportunity for a company like Castrol, and how do you look at scaling that up?
Yeah, so I think let me touch on that. First of all, we've called out globally, data center thermal management is a big play for Castrol. And globally, we're investing about 500 crores. That was announced in R&D facilities in our parent company in UK, to which we have access. The way we see it is data center market is going to grow, okay, in India and globally also. It's a function of what cooling technologies data centers adopt. Okay, right now, most of the data centers use something called air cooling or HVAC systems, traditional systems. But I think as the computing power demand grows and we need faster processors, cooling requirements will grow. And Castrol as R&D, we are investing in technologies like immersion cooling, which can give us opportunities in that space. So that's where I think it's still in development stages. We have certain tests running with customers. We've tied up with global players in data centers who design and develop data centers. So we see this as an opportunity area, and that's the perspective we're coming from.
Mr. Sangwan, so you're saying that the parent already has a product, is it?
Yeah, we have liquid cooling products for data centers, which are already available. Yeah, for immersion.
And this is already being used, immersion cooling? Your product is already in use?
So we're working with some of the big data center players in terms of testing and piloting these. I cannot say anything more than that, but we have a data center cooling product which is available.
Because in India, the market is about only 1,000 megawatt, right? I mean, it's expected to grow rapidly. Because a lot of capacity, etc., is coming. A lot of big players, conglomerates, etc., are coming in very fast. But this is are you saying this is in testing stage or this is a settled technology now? I mean, it's much more efficient than air cooling.
Yeah, it is much more efficient because the energy consumption is much lower and is far more efficient in terms of space utilization also. But as I said, we're doing testing with some of the big customers, and we want to continue developing this further.
By when can we see the technology? You said you have access to this. By when can you get that technology here in Castrol? I mean, for Castrol? Yeah.
So I think as we kind of further proof of concepts get verified, depending on customer requirements and customer businesses, we will be able to bring it in. I think to say which time is very difficult for me. I think it again depends on how the tests and various programs that we have with customers develop over the next few months and years.
You know, we had the Gulf Oil management and they gave us the total, I mean, in terms of volumes, right? If you project data center capacity, it's say 2,000 megawatt. I mean, you say all of it becomes this immersion technology. Even then, as a percentage of total volume sold, it is minuscule. But I don't know if that is the right way to look at it. I just wanted your perspective. Could it be a high margin product? So it's in terms of share of volume, it could be low, but share of profit could be high. I don't know what the internal thinking is, Mr. Sangwan.
So, first of all, I think you keep referring to Gulf. It's their view, and I wouldn't like to comment on that. It's for them to judge. As far as we are concerned, we've called it out globally as one of our plays for the future, and we believe in this and will continue working on this as an opportunity area.
Okay, we'd love to get more details as you're not ready to share those with us. So maybe next time, and we'll have more updates on this one. Really appreciate it, answering and taking all those questions. Thank you very much for joining us, Mr. Sangwan. And good luck for the underlying business as well as you go through the rest of the financial year. We'll take a quick commercial break here. Okay, I think what we'll do is we'll look at trades, individual trades. Mitesh is with us. Mitesh, your thoughts on what we're seeing in terms of price action, 50 points higher, but actually start with BSE and what the stock is seeing. Big 7-8% move right now.
So, Prashant, I think, BSE, in fact, has done a big correction and is now reversing. My sense is starting an uptrend with a minimum target of 2770 to about 2860, and in a good case 3000. So I think the stock is a good bet for people who are getting wanting to get into a swing trade. I think this looks good to me.
Okay, well, what about individual stocks?
I have a buy on NCC with a stop at about 340. Target of 380 can be looked at. Good breakout. It's a cash stock though, I think, but it's giving a good breakout. So I would recommend a buy here. And the other one is a buy on a buy on Bajaj Auto with a stop at about 95.75 and a target of 97.60.
Okay, let's do one thing. Let's take a quick commercial break. A spotlight on the top stocks on the move on the other side. Stay with us. All right, Torrent Power is one stock in focus today. So Vivek is here to tell us why you need to watch out for that one. Vivek, over to you.
Well, that's right. So Torrent Power, like we highlighted earlier, very strong year-on-year growth as far as, company was concerned. Generation volumes are picked up quite significantly. Along with that, remember, the gas power plants that the company has, both, Sujin, is something, that actually operated under Section 11. Aided by strong summer, you actually saw significant offtake coming in over there as well. So strong merchant sales spread, aided by Section 11 and strong power demand, actually led to a very good quarter as far as Torrent Power is concerned for Q1. Revenues higher by 23.5% on a year-on-year basis. EBITDA jumped up 57%. Margins 400 basis points expansion. Profitability on the back of that higher by 87%. Thermal PLF, something that has jumped up quite significantly on a year-on-year basis, 60.4%, versus last year it was just around 39.6%. Now, generation revenues up 65% on a year-on-year basis. On the back of that, company sales increased contribution from merchant power sales and also increased contribution from licensed distribution business. Along with that, the company also gave the capex guidance, for the distribution business, for thermal capacity addition, and also, they're quite confident in terms of scaling up the pump storage plant as far as hydrogen is concerned. All of that keeping the stock active in the session today.
Okay, all right, Vivek, thank you very much for that. India Mart reported numbers in the last hour yesterday. Let's revisit that. Stock's down today. Reema's got more. Reema.
Thanks so much for that. So yesterday, in the last 1 hour, when India Mart reported numbers, the stock rallied on the back of a very strong margin expansion. But the details which have come out post-market close are a bit concerning. One, the paid subscriber growth has been muted. In the current quarter, it stands at 1,500 roughly paid subscriber addition versus about 2,700 in the prior quarter. Secondly, collections growth at 14% is lower than analyst estimates. Nomura was at 19%. Third, the traffic has dipped to 267 million, lower than what we had in the prior quarter. And fourth, this sharp margin expansion to levels of 36.1% was aided by a near 300 basis points cut in the company's sales and marketing expense. And the company clarified that some of this is going to reverse because the company has hired people in June and July. According to them, EBITDA margins, they're targeting close to about 33%. Nomura has come out with a note. They're saying they're also concerned about the weak increase in business inquiries over the last 5 years. So from FY19 to FY24, business inquiries have gone up only 5%. And therefore, getting back, increasing your subscriber addition is going to be a challenge. They're neutral on the stock with a target price of 25.20. But Ambit believes that the current weakness is transient. It's the top pick in the online classified space. Because remember, India Mart is also, the market leader when it comes to B2B, SMB. It's like a B2B platform for SMBs as well as, small to medium-sized businesses. And therefore, Ambit is very bullish still on India Mart. Back to you.
Okay, thanks a lot, Reema, for that. Let's take a short commercial break. On the other side, Lata will connect with Nitin Agarwal of Motilal Oswal Financial Services and Santanu Chakrabarti of BNP Paribas to decode the banking and the NBFC sector in Q1.
Hello and welcome. It's The Economy. Today is earnings analysis time, especially of the banking and financial sector. Most of the results are in, except the big one, SBI. BOB is due today. But among the banks that have come, clearly there is scar because of the fight for deposits. We have seen a reduction in deposit growth trailing advances growth, a fall in CASA, and problems of credit being far ahead of deposits, and therefore a credit-deposit mismatch, something the Reserve Bank has been pointing out. There are also small problems of asset quality emerging. It's usually a first quarter phenomenon, but perhaps some of it could prevail, could continue. Let's ask the experts. Joining me now to discuss the banking results so far, Shantanu Chakrabarti, the India analyst, banking and finance at BNP Paribas, and Nitin Agarwal, the head of banking and finance analysis, institutional equities at MOFSL, Motilal Oswal. Gentlemen, thank you very much indeed for your time. Shantanu, I'll begin with the predictable one, ICICI and HDFC Bank. ICICI Bank, obviously, excellent results. But now, would you say price-wise, the advantage that it has shown in its results is kind of covered? Would you rate them equally, ICICI and HDFC Bank?
We have a higher upside and a higher preference for HDFC Bank. But we just put out a very detailed deep dive report on ICICI Bank a couple of weeks back, where we argued that it's time that now we start thinking of this as a 3 times price to book bank at the core level. Because what I tried to demonstrate out there, and something that we have been seeing in action, is currently ICICI Bank has what can be considered the greatest privilege in Indian banking, which is essentially adjusted for the size of the retail franchise and the overall operating cost and scale, the benefit of cheapest raw material. We tend to often think of raw material only in terms of cost of funds, but we have to load what yield is possible on the portfolio and, essentially what kind of operating costs are loaded onto it. And once you figure that out, you'll see that ICICI Bank has the privilege of not having to take any major risks, still maintain and gain market share, which is perhaps the biggest edge. So as far as upside goes, therefore, we have a small re-rating still due, nearly not as dramatic as what we perhaps have for HDFC. But in some sense, it is the most worry-free bank to own and less susceptible to quarterly volatility than any of the other names. Okay. So to that extent, it remains our second most.
Shantanu, ICICI is trading at 2.86, and you're saying we should start looking at it as a 3 times to book stock. Yeah. One more question before I get to Nitin. What's your sense about when HDFC Bank will be able to get over its merger pain? Do you think it gets back to 3, say, in 2 years' time? What's the expectation from that stock?
HDFC's recovery trajectory has become highly dependent on what happens to overall system CASA. So in some sense, the monetary and liquidity conditions out there. So, if rate cuts are delayed, things like HDFC and Axis suffer a lot more than ICICI. If rate cuts happen early and there's a pickup in liquidity and monetary conditions, and therefore current account, savings account money within the system, coming off the low base that it is, its optimization of the entire liability side and therefore margins and ROA plays out earlier. So, we have very little doubt that, over a period of time, this normalization to about 2% ROA and 17% ROE at the core level will happen for HDFC Bank. But it's the timing is exquisitely dependent on the timing of rate cuts, how easily net durable liquidity goes into a surplus, and of course, at what point the gap between FD and SAR rates reduced to the point that savings account money can start picking up again.
Okay. Fair point. I mean, those are all extremely extraneous factors when you're going to see liquidity adequate. Depends on how fast the government spends money. And as if we were all thinking that the Fed is going to cut and therefore there is a cut on the corner, BOJ has now raised. So we really don't know which way the Reserve Bank will go or how long it will take. Nitin Agarwal, thank you very much for your patience. Let me come to the next 2 set of banks. We did ICICI and HDFC Bank. You can quickly tell me your position there, but more importantly, when it comes to Axis and Kotak, do you think that it's in Baizu?
Yeah, so see, both Axis and Kotak, there are one of the other things that is limiting their performance. If you look at Axis, this quarter, the business numbers were slightly modest, more modest, and wherein the deposit growth was like marginally negative. And that led to a slight rise in the CD ratio. And that's something wherein the bank is engaging with the RBI and has submitted a plan to improve things over the year. So that is an overhang on how the growth rate overall will be. And I think Street is factoring that in, and slight moderation in growth estimates have happened for Axis. So that resulted in the subdued reaction or some decline in the stock after the results. And Kotak, I will say, on the other hand, business numbers were relatively better, especially on the loan side, wherein the new management has delivered well. On the lending side, they have shown some bit of aggression and tried to compensate for the limitation that they have on the consumer side, especially after the RBI restrictions. So for the full year, we are still expecting loan growth to be higher for Kotak vis-a-vis Axis. And gradually, as you see some limitations going away, which is going to take time. But in the interim, bank anyway is making pretty healthy ROA. Our estimates are like well above 2, beyond 2. Like bank is already making close to 2.4 ROA. So if it sustains that level of profitability, which we expect by and large to be the case, then I think you can look at some moderate returns to come through from Kotak Bank.
Certainly outstanding.
We anyway have neutral rating on both the stocks.
Okay, what's your pecking order in the Nifty, in the banks, in the Nifty itself, Nitin?
We have been more positive on ICICI, SBI, HDFC Bank amongst the large names. And amongst the mid-size, we have been picking Federal Bank, which is outside Nifty, of course.
Okay, got it. Shantanu, to come back to you, what would your mid-cap bank preferences be? At least banks like AU Finance seem to have stood out.
Right, and that is our preferred mid-cap play. Now, having said that, Lata, I'm probably a little less constructive on the name that I used to be earlier. It's still, on a relative basis, amongst our mid-cap bank coverage, the best play. But I'm somewhat less than pleased about their margin defense and growth in core segments in the last 2 years. First quarter has shown on margin defense and as well as growth
AU Finance. You're speaking about AU Finance? Okay.
Right. That's been a little weak. I mean, typically people buy this bank because they essentially get almost an NBFC-esque franchise within those core segments with a low penetration argument to go in their geography. Right, that's one of the key reasons to own that bank, and that should have given it greater pricing power in an admittedly competitive environment. But perhaps the fact that the yields on either of those segments or their growth has kind of been a little lackluster in the last 2 years. I mean, sure, there's some improvement in the current quarter, has reduced my enthusiasm in the near term a little bit, especially given that it's not a cheap bank in that context, right? So, the performance standards remain a little higher than the typical mid-sized bank, which trades at 1.3, 1.4 times.
Okay, fair point. Nitin, to you, the public sector banks. I mean, Punjab National Bank stunned us yesterday when they said that they had guided for a credit cost of 100 bips, and now they're reducing it to 50 bips. I mean, that's dramatic. What in the PSU banks impresses you? Do you still think that they have this high provisioning base, which might give them an advantage on credit cost, on lowering credit cost and increasing profit?
Yeah, clearly, like PNB numbers were pretty strong across all the fronts. Even on the business growth side, like we did see a 5% sequential growth on advances from the bank. And specific to your question on the asset quality and provisioning, I think PSUs comparatively are doing a lot better. If you see, like all the banks, private banks have all come through with their results. And in general, we have seen either a status quo or a rise in credit cost across banks. And PSUs, on the other hand, is either a status quo or an improvement. And more likely it is an improvement rather than a status quo across banks. And which is where PSUs over the year are relatively better placed to deliver a stronger earnings for FY25. If I look at our estimates also, we have did some moderation across many private banks, and even the loan growth has seen a cut. While PSUs, because their credit cost is holding up very nicely, and in fact it is moderating down. Like all the three banks which have come so far, Canara, Indian Bank, PNB, they've all reported a lower provisioning number than what we estimated. And if this trend goes through, and most of these banks are indicating a sustained trajectory on this front. While ECL provisioning is something that one will need to watch out as RBI comes up with the filing guidelines. But more or less, like these banks are well placed to deliver a high teens earning growth for FY25.
Okay. Yeah, I agree. Expected credit loss will take it out on PSU banks more. The private banks seem to be more prepared for it. But you still have only a neutral on PNB, Nitin. You were not impressed by the higher than expected, credit cost, or rather lower than expected credit cost guidance?
No, yes, we have, in terms of rating, yes, we have a neutral, but we raised target to 135 on the bank. Okay. We were at 130 early, which we raised after these results.
Okay. Shantanu, now to come to the NBFCs, even the mighty Bajaj Finance showed some trouble of bad loans. And, it trades at very expensive valuation. So will you take away something from it because of that, or do you think that it is seasonal?
Right. So in Bajaj Finance, what is quite interesting is now the narrative has moved along to margins and credit costs from 165 going to something like 185, 190 basis points. And of course, that means that even with 30% kind of loan growth for the full year, you end up with earnings growth, which is high teens, nearing 20%, if not touching it. And on that, we are making an argument, essentially, the street is, that a 24p for this is high. Now, if we put things in context, we'll realize that once rates start to come down, the margin mean reversion is nearly automatic. So the only meaningful thing to worry about from these results is essentially credit quality. Now, on credit quality, we need to drill down a little further. If we'll see that the most challenges seem to be coming from B2C rural. And there, frankly, Lata, my sense is that Bajaj Finance doesn't have the kind of right to win within B2C rural, our research opinion, as it does within, say, B2C urban, which has been, the data-heavy specialization area of Bajaj Finance. And therefore, I mean, if I look at the history of Bajaj Finance has made the most number of experiments in terms of products. At points of time, it has done things like equipment financing. And everything that has not worked, they have been very nimble to kind of rationalize. And that's what makes it the powerhouse that it is today. Perhaps the B2C rural side of the business, large parts of it may not turn out to be a very successful experiment. But if you put in context what the rest of the business is growing at, it dwindles into a very small problem very soon. And again, the long-term earnings growth should track whatever long-term asset growth is going to be in this business. And in that context, the PE is about 30% lower than what the sustainable earnings growth probably is for the next 3 to 5 years.
Okay, so you're betting really on the corporate governance and the intelligence of the company to move out of what's not working. Very quickly, absolutely out of time, Nitin, but what are your mid-cap bets in the NBFC space?
So we continue to prefer vehicle financiers in NBFC space, wherein we believe that growth rates are going to sustain at a healthy level, asset quality, performance is on track. And as the rate cut cycle comes through, these banks, these NBFCs will see some recovery in margins also. So which is where we like Chola, Shriram, PNB Housing. And so these are the three NBFC plays like we like.
Okay. Well, we do need a much longer segment to discuss the entire NBFC space as well. Gentlemen, thank you very much for whetting our appetite. We will touch base with you when the entire result season is over. We have to wrap up on Bazaar on a fairly positive note, actually. They will all benefit once the rate cutting cycle starts. So even if the BFSI space is a bit of an underperformer, it's good to keep waiting there. Wrap up on Bazaar. Short past is coming up.